as well as I'm going to give some insights to new people that absolutely have nothing to little to no idea of when it comes to trading. But I'm going to break down this quick video. Make sure you like, comment, and subscribe. If you guys don't know who I am, my name is Johnny. I've been involved in the online space for nearly 5 years. I started first off in multi-level marketing, focusing on sales and whatnot. I saw a lot of success with that. It was my full-time thing for a few years, and then I transitioned away from that, and now I'm fully indulged and focused on day trading. I think it's the best field to learn. And I've been a year and a half in, nearly 2 years, and I'm seeing a lot of success, and all praise to God. First and foremost, and in this video I'm going to break down basically just everything that I do when it comes to trading. So obviously, guys, number one, if you're not aware of what is happening within the world, you need to understand that essentially we are, not we, the United States, Israel is at war with Iran. I think it's just crazy what's happening out there, and it's unfortunate, and it does affect a lot of lives, and also affects the market. Now, because of that, the market's moving very unpredictable. It's moving very uncertain. Assets like indices, stocks basically, and cryptos, as well as oil, they react very aggressively to uncertainty. They react very wild to basically chaos that's happening within the world. We see oil, crude oil, crazily going up in value. We see assets like gold going up in value, going down in value. We see assets like cryptocurrencies dropping in value. And we see assets like the stock market going down in value as well when chaos happens. So if you guys are not educated on basically what's happening within the war, number one, start tuning into CNBC. Get on the website, watch it actually on TV, and start educating yourself on what is happening. I normally don't watch television. It's the only thing I really watch is CNBC, because it educates me on what's happening geopolitically, in the world. Now, another person that I recommend that you guys watch is basically Riyadh Reports. He goes live 2 times a week for about 4 to 3 hours, breaking down geopolitical events. He's Myron's younger brother. If you guys aren't educated and don't know what the hell is going on, I highly recommend that you start watching his stuff. This affects the market heavily. We're at a point in terms of markets that price action isn't at times respected, because we have craziness happening within the world. And Orange Man tweets something, market goes either crazy bullish or crazy bearish. If you're looking at the charts, guys, you always want to start on the highest possible time frame. For me, I mostly focus, I only trade one instrument, that is ES, which is the S&P 500's futures market, but you want to basically stick to one instrument, one strategy, and one time that you basically log into the markets. Now, but there's 4 major markets that you can trade in. We have Sydney, we have the Tokyo Asia session, we have the London session, and we have the New York session. So you want to find an instrument that moves extremely well in that specific time frame. I always tell people all the time, that's the first thing that you want to do, because trading is the biggest misconcepted thing, that you need to be 50 million hours on the chart. That's not the freaking case. You just simply need to have a session that you are actively on to make money, and you also need to devote some time to study the market so you can get better at it. So obviously, I trade the New York session, which is from 9:30 in the morning to basically 5 p.m. Now, this does not mean, and I'm going to repeat it because a lot of new people think that you kind of do need to do it. You don't, and it's not recommended to trade the 8 hours. The most liquid time in the market for trading New York is basically 9:30 in the morning to 11 a.m. Why? Because we have the overlap of the London session overlapping with New York, and that gives us double liquidity. And these are the highest volume sessions within all 4. Sydney, we don't have a lot of volume, to be honest, and Tokyo, we have a lot of volume, but for Asia pairs, the only instrument that I believe that can work in all 4 sessions is gold, because gold is a universal asset that everyone uses. So hence why gold's going to move really well. But for me, I don't like trading gold, because I don't want to be prone to get on the charts at a very unregulated or unscheduled time, and just a trade. Yes, my profit my profits couldn't grow. But at the end of the day, I'm personally more prone to lose, and that's why for me I was experiencing a lot as I was losing. So what I do now, I focus on just trading from 9:30 to 10:30 in the morning every single day, Monday through Friday, and I focus on ES. Now, basically, the first thing that I normally do, and this is what you should do as well as a trader, is you want to identify what type of trend that we're in. It moves in an uptrend like this. We also move in a downtrend like so. Think of it like a staircase. That's the best way. I'm gonna explain it to you guys like explaining it to a child. And then we move sideways. This is a rangy market. This is a market that basically moves like this. Now, this is basically the pattern, or how it's called, is lower highs, higher highs. My apologies, higher lows, higher highs, higher lows. It's basically going up with slight pullbacks. The exact same thing here. We have lows, higher lows, and whatnot, lower lows, like the staircase analogy. And then here we have basically something called equal highs and equal lows, because everything is basically all together. Nothing is breaking. It's literally all the same. And that's not a market that you want to trade. This right here is called a balanced market. We want to avoid balanced market because you're going to lose money doing this. You want to trade in imbalanced markets, whether we're going on an uptrend like this or whether we're going on a downtrend, because that's how basically money is basically made. This right here is how money is lost. We don't want to lose money. Obviously, it's inevitable. You're always going to have that risk. But the way that you mitigate your risk when it comes to trading is that you want to basically avoid consolidated phases. So right now, currently, as you're looking at my chart, this is the 1 hour time frame. So you guys can see here on TradingView, we have the 2 minute, the 3 minute, the 5 minute, the 1 hour, the 2 hour, the 4 hour, the daily, the weekly, and the monthly. Specifically how I trade the ES S&P 500, I look at the hourly time frame because it gives me overall good structure. It allows me to see what basically is the current trend of the day. Now, you guys can obviously see this was basically all of Monday right here. This as well mixed in Tuesday. This right here was all of Wednesday mixed in with Thursday. And this right here was all Friday. So we didn't really have a lot of opportunity. Like the best possible day to trade, that gave us clean price action was probably Tuesday. That was the one day that I basically traded, and by the grace of God, I made money that day. But unless you were trading at 7 p.m. and you caught this beautiful move, that would have been the move of the week. Now, why did this move happen? Because this is when the U.S. and Iran had a 12-day ceasefire, and that obviously is positive news for risk on assets and just the stock market as a whole, and price ripped up. And I basically mark up my London high and my London low. Why? Because I'm trading, guys, during New York right here, and I want to look at what was the highest point that market makers pushed the asset that I'm trading during the previous session, which was London. So obviously the reason for that is because at the high, that's where we have a lot of resting liquidity and a lot of money in general, and at the low, the exact same thing. And this plays like a solid support and a solid resistance. So I'm not trading in an area where I'm likely to get basically tricked and I lose money because I'm trading amongst noise, which is basically a choppy market. So for example, and I'm going to mark this up right there, and we're going to basically mark this up as my London high. So now I have identified the highest point of London, which is this higher high. If you guys don't know what I'm looking at, it's basically right here. So this was the highest point between 3 in the morning to the current time that I'm looking at it, which is basically 8 a.m. because I usually mark up at about 8:45, 9 in the morning. What was the lowest point? The lowest point was very clear. It was right here at this 4 a.m. candle right here. This was the lowest point. So I'm going to come here and I'm going to put my zone right here, and I'm going to label it here as my London low. This is going to give me a benchmark. So now I have basically priced box price in. And personally for me, anything in the middle here, I want no business of. Why? Because this is all noise. So if I'm like, yo, I want to get in for a sell right here, and I get in for a sell, we drop a bit, next candle prints, we drop more, we go back up, next candles, we drop here. My target is like here, for example, and then what happens? We chop, and then boom, I get stopped out. So trading these areas here or trading right here is all noise. You want to avoid it as much as possible. You want to avoid it. You want to get involved in areas that we have a lot of liquidity, where market makers have pushed price, where market makers are very likely to basically take the price to or away from. So once I identify that, then I go on the 4-hour time frame and I look at, okay, what's the nearest area price could possibly go to. Now, what did I say? The market moves in 3 directions. We have basically an uptrend, which is this. We have a downtrend, and then we have a ranging market. Create these imbalanced markets. We create something called an imbalance gap, which is basically this, where we have basically little candles here. We have this explosive candle that imbalanced the market, and then we basically kind of consolidate a bit, and then we either reverse and we keep going up, or we continue the movement, or we end up recovering. So what, for me, if I'm looking at this in hindsight at basically 8 in the morning, this is basically how I was marking up. I would say to myself that, hey, you know what? We created this huge imbalance on Thursday, a lot of liquidity here. I would like to put my stop loss, or my take profit right here at this area of resting liquidity. But just because of how the market conditions are, again, this is just me, you guys can do your own thing, but I like to put my take profit on an imbalance at 50%, which leads us right here at this candle high, candle closure high. There was a wick there, however, the largest candle with the body, it was these two. So this is a high probable area that if we do reverse, this is an area that I want to target. And if we look at it, that's basically a 12-point catch on the ES. ES with 10 points on a 50K funded account, you're looking at $500. 12 points, that's like close to $600, $700. So I'm taking that any day of the week. So once I identify that, then I want to identify, okay, if we do go bullish, what could possibly be an area? So for me, it would possibly be this area of resting still liquidity. And I'm going to explain to you guys what that basically is. You guys can see here we have a lot of wicks. This area basically played off smoothly off of area. So we saw a break here, and what did we do? We hit this area. Same thing here. We had a break here. Where did we hit? We hit the area. I can put my take profit all the way up here, and I can catch this huge move right here, which is like over basically almost 100 points. But that's stupid in my opinion. Because why would you do that? You're going to end up turning a winner into a loser. Imagine if I did that here. We broke, we touched the nearest level of resting liquidity. I'm being a jackass. I'm saying, no, I want more. And the whole thing reversed, and I turn a winner into a loser, which is the worst feeling in the world when it comes to trading. So now that I've identified my key areas, then I would go on the 3-minute time frame, and I would look for basically a structural break and a continuation with the retest. And obviously, we didn't get that in any opportunity. This is the area that I trade, this block right here. This, if I would have taken any position here, I would have lost 100%. This is my trading journal from the 31st of March. Obviously, what happened here is I followed the trend. I identified aggressive volume candles. I targeted the nearest level of resting liquidity. This is a beautiful 1 to 3 risk to reward. I waited for a break of my London high. I looked for a retest at a fair value gap, which I did see right there, which confirmed structure, a continuation, and I executed my position with the utmost confidence following trend. Where did I target? The nearest level of resting liquidity. Sure, price did rip and go higher. However, if I was a greedy asshole, the whole thing ended up reversing actually, and I would have lost. Break of my London high. And once we retested back down here, yes, I got in a little bit early, but I just started following trend and I saw what I liked, and we broke up to the upside. It was literally a clean 13-point cap, 90 trades basically documented from basically January the 14th of this past year. And I've taken 64 wins. I've taken 90 positions. 64 of them have been winners. 4 of them are break evens, and my yellow days are no trade days. Like here, like it's the same system, guys. Like, you know, I got in for shorts here. I basically we broke, waited for a retest, and I targeted the nearest level of resting liquidity. So again, I don't do anything crazy, and nor should you. You should simplify your trading and make it as simplistic as possible. And the most important thing is understand market structure, understand what you're looking at. And this all stems from you just looking at the higher time frame, following trend. The trend is your friend. What type of trend are we in? We are in a ranging market. Well, what about, Tuesday, Wednesday, Johnny? Ranging market. Oh, okay. What about Monday, Johnny? Ranging market. So you want to understand that, like, we're in a ranging market. Don't force positions. Not every single day you need to trade. Sitting on your hands and not forcing positions is a massive skill that you can build. And I think for me in the past, what I used to do a lot is I used to do that a lot. Is I used to wait. I used to force positions, and I'm looking at the hourly time frame, and I'm looking at specific candles that are printing to basically support my smaller time frame thesis. And for example, if we are at a London low and we're creating a tweezer bottom, I know that possibly we can create a reversal to target the nearest level of resting liquidity to the highs. If I see a tweezer top, it's obviously probably a reversal to the lows. If I see a bearish shooting star after an aggressive trend, it's likely a reversal like this. You don't like. There's no reason why you should have traded today on Friday. There really isn't, unless you're just money hungry, and that's not what you want to do. So yeah, guys, hopefully this video brought you some value. If you have any questions, guys, feel free to drop it down low in the YouTube video. Message me on Telegram. I'm always very active. I'll always reply to people. Message me on Instagram. I'll always reply to you guys. I'm always someone that loves to help. I'm not someone that likes to gatekeep. Trading has been going really well for me by the grace of God, but it's because I simplified everything, and I simplified my approach, how I view the market, how I think, and I, most importantly, on top of that, is I work on my psychology. I literally read books that are going to help me with my trade. Like, I literally made a video talking specifically about this book, the Neville Collection, how it helped me with trading, my psychology. I always meditate. I converse with God. I make sure that my mental is at the most optimal, so when I trade, I'm able to see things like this, and I credit all to God and obviously the work that I put in. Without Him, nothing is possible. So make sure you guys like, comment, and subscribe. And if this video brought you some value, let me know in the chat, and I will see you guys on the next video. Let's go.